So many retirees are surprised to learn that taxes can be one of their largest expenses in retirement. As a fact, many retirees think they're going to get into a lower tax bracket in retirement. That's often not the case. Social Security, pensions, and withdrawals all add up, and without the right strategy, you could be sending more to the IRS than is necessary, and we hate that, don't we? In this interview, we're going to cover why tax planning is so important and how smart strategies can actually help you keep more of what you've worked so hard to save and have more cash flow in retirement. And joining me is my guest, Dariusz Godlewski. He is the principal at Kaizen Wealth Advisors in Chicago. And Dariusz, I know we talk about taxes a lot because you spend a lot of time on tax planning for your clients, and you do a lot of education around it too. So let's talk about tax planning. Why is it so important, other than the obvious?
Well, most people don't realize that taxes do not disappear when you retire. And in fact, for many retirees, taxes become one of their largest expenses. And things like Social Security benefits, required minimum distributions, and investment income can all push you into a higher tax bracket. And tax planning is about being proactive and using strategies to keep more of your money in your pocket. A dollar saved in taxes is the same as dollar earned. And over the course of retirement, smart tax planning can make the difference between just getting by and living with real financial freedom.
And I think a lot of people make the same mistake. They're not doing tax planning, right? And they think they're okay because they're working with a CPA or an accountant, which are kind of historians, right? They look in the past. So again, what are some other common mistakes that people make about tax planning in general?
Well, a big mistake is assuming taxes will be lower in retirement, and for many people, that's just not the case. Another mistake is taking money from wrong accounts at the wrong time. And without a plan, people often unnecessary taxes on Social Security, higher Medicare premiums, or push themselves into the higher tax brackets. Another mistake is waiting too long. And once you hit your required minimum distribution age, your options shrink. And planning ahead gives you flexibility, and that's where the real savings happen.
Yeah, I think a lot of the people, when you talk about required minimum distributions or RMDs, aren't aware that they increase, over time, and that can add to the tax problem. So then how do you start helping people minimize taxes?
Well, we look at the big picture, where their money is saved, how it will be withdrawn, and what impact that has on their taxes. Strategies like Roth conversions, charitable giving, tax-efficient withdrawal sequencing, and using tax-advantaged accounts can make a huge difference. So the goal is to create a withdrawal strategy and that keeps clients in the lowest possible tax brackets while still meeting their income needs. It's not about avoiding taxes completely, it's about paying the least amount legally required year after year.
And I think, most people look at, let's use Social Security as an example, because I want to talk about other areas of tax planning and retirement. I think a lot of people think maximizing benefits is about getting an extra $200 or $300 a month. It's really about minimizing taxes in your Social Security. So how does tax planning apply to other areas of retirement planning?
Well, tax planning is like a thread that runs through the entire retirement plan. Investment returns, income planning, estate planning, they all get affected by taxes. If you ignore taxes, you may end up losing more than you gain from smart investing and careful savings. And by coordinating tax strategies with income and estate planning, we can make sure that plan is efficient. And that means not only protecting your income now, but also reducing the tax burden for your spouse, your heirs, or even your business if you are an owner, because it's all connected.
And then finally, too, for that person who's watching and they're thinking, well, I'm not doing tax planning or anything like that, what's your advice? How should they start?
Well, my advice is simple. Don't just think year to year. You gotta think long term. And too often people focus on reducing their tax bill this year, but the smarter move is to look at the next 10, 20, or even 30 years. And sometimes paying a little tax now, like for example with Roth conversions, can save you and your family much more in the future. And the key is to have a forward-looking tax strategy and not the last-minute reaction every April. And good tax plan gives you clarity, control, and peace of mind. And at the end of the day, it's not what you make, it's what you keep that matters most.
That's great advice, Dariusz. Thank you. He is Dariusz Godlewski, and he's with Kaizen Wealth Advisors in Chicago, Illinois. Thanks for watching this edition of Retirement News Online.